All right, everyone, are we ready for day 2 of Equity Crowdfunding Week? We're going to learn about clean tech, real estate, e-commerce, and international investments, beginning with the rise of community rounds and how to raise $5 million. Let's welcome Maria and Jonny.
Hello everyone. Welcome to day 2 of Equity Crowdfunding Week. Jonny Price here. You may remember me from such panels yesterday as the panel we did yesterday. And here with Maria Springer, my friend and partner in a work sense from Capital Department. It's really good to be here with you.
So good to be here, Jonny.
And so Maria has helped many companies raise multiple million-dollar rounds on Wefunder. So she's an awesome person to be talking to you guys about the best strategies and tactics to employ in raising capital in a community round, crowdfunding campaign. But maybe do you want to start by just kind of introducing yourself and talk about how you came to start Capital Department?
Yeah, absolutely. So when I was 22, I co-founded a social venture that distributes clean energy technologies in informal settlements across East Africa. And what they don't tell you when you found a venture is that you're going to be tasked with fundraising. And that is not why I started it. I literally, Jonny, I literally used to Google how to overcome the fear of fundraising. I was petrified at asking for money. And after getting my MBA, I was the chief of staff to a YC-backed company. And I learned that fundraising sucks. It's hard. And when you're a CEO raising capital, not only do you have to ensure that your team is well aligned and that you're hitting your month-over-month, quarter-over-quarter, year-over-year growth metrics, you also have to do a full-time job of fundraising. And so that's how we came to start Capital Department.
What was the YC company?
It was called Public Market.
Okay.
Yeah, it's a blockchain startup.
Cool. Mm-hmm. And so tell us about Capital Department. When did you launch the company? What do you guys do?
Yeah, so we officially incorporated this year. But to date, we've helped raise over $100 million for founders. And essentially what we do is we help founders with their strategy, their operations, and the execution of their raises. And we're really proud that we work with founders across Sub-Saharan Africa and Europe, and now the United States as well.
And you do both Reg D raises, kind of conventional like VC angel rounds, as well as Reg CF, right?
Yeah, exactly. So we actually got our start in venture, raising for venture rounds from anywhere from seed to Series C. And then it was only last year that one of our YC clients actually approached me and was like, Maria, like we'd love to get your help on launching a community round at Wefunder. And no offense, but I was like, oh, I don't know about this. You know, like there was just, at the time I was ignorant, to be honest, right?
Yeah.
And we launched it, and at the time it ended up being the most successful raise ever launched by a female founder on Wefunder. We've since broken that record, and I learned a few things which really struck with me and have really changed like the course of Capital Department and sort of our work. One is that for founders, Wefunder is absolutely incredible, right? On the one hand, you guys have this SPV, right? So you can raise capital from thousands of investors, and it will be a simple one line on your cap table, and that's absolutely incredible. And then two, just you don't have to give a board seat, right? Like one of the biggest challenges that founders face at every single round of venture is that they have to give away board seat and thus control. When it comes to a community round, that's just not the case. So raising a pre-seed or a seed via community rounds is actually quite incredible from that sense. And then finally, I think in the case of Up Council, the CEO suggested that it's literally one of the highest ROI marketing campaigns they've ever done for the company, irrespective of the capital raised, right? Because you mobilize all these evangelists to support your company.
So So the Up Council, KJ, that was the first Reg CF raise that you did?
It was, yes.
Okay.
And we raised over $3.7 million.
And so how many have you done now?
Whew, quite a few.
Yeah, too many to count, probably.
I won't bore us all by counting, yeah.
But probably like 10 or 15 or so?
Yeah, probably 10 or 15, yeah.
And so what makes a great one? There's a bunch of different directions we could go in, I guess, with this conversation. But yeah, just curious, like, because you're pretty selective as well in who you work with, right? So how do you kind of decide who to work with? And I guess related, like, what criteria do you think make for an awesome community round?
Yeah, it's a great question. So one is we work with talented and exceptional founders, right? Like we are selective in who we're raising from because ultimately Capital Department is an advisory firm. And so we only want to work with people for whom we think we can deliver massive results and success. Luckily, our entire company has been built around like word of mouth and referrals, and we'll keep it that way for as long as possible. So exceptional founders, we really like to make sure that they could raise from elsewhere as well, right? That their only option isn't community rounds, because I think that retail investors deserve access to the best startups, right? And so
100%.
for us, that's really exciting is like, okay, if you could go out and raise venture, right? But you're choosing to do a community round,
right?
You know, that's really powerful. And for me personally, you know, excuse me as I talk a little bit about my thoughts on this philosophically, but when you're raising a venture round, and let's say you're successful and ultimately you exit your company or you IPO, who are you ultimately making wealthy, right? You're making wealthy the LPs in that venture fund. And we all know the statistics about the types of businesses that venture funds are funding, and then also who's funding the venture funds. Right? And so for me, it's just so impactful to imagine that like one of these companies for whom we've helped raise capital is going to exit and make thousands of everyday investors a return, right?
Maybe millionaires,
Maybe millionaires. And I want to be part of that, right? Because we're not going to shift some of the massive inequality we see in this country if we don't start, you know, figuring out how to create access to capital and to investments.
Love your kind of commitment in who you work with to investor returns, right? So the first thing you said was amazing founder. Second thing is like raising on good terms where they you know would be able to raise at least part of the round from angels or VCs conventionally.
Totally.
Any other factors that you're looking for? Consumer-facing kind of mass audience? Or?
So we are pretty industry agnostic. So we've helped raise capital for real estate, blockchain, crypto, consumer products, marketplaces, et cetera. So I would say mostly, you know, high growth tech companies is our sweet spot, and then also CPG companies that have incredible sort of year-over-year growth and show an accelerated trajectory.
Yeah. I mean, Tyler Hayes is the founder of Atom Limbs. You worked with him. I think you helped him raise $5 million on Wefunder, right?
$5.6 million.
5.6, love it. He obviously didn't have a community, or at least I don't think he did, because he's making a prosthetic limbs, a better prosthetic limbs. So really cool mission of the company as well. Incredible founder, and to your point, like really awesome kind of terms, like had kind of other investors that he could have raised from and did raise from. But he didn't have a community, I guess, when he launched, because it was hardware years away from having a product in the market, right? So
yeah,
I guess to take Atom Limbs as an example, when you engage with Tyler, what kind of, we were actually talking a little bit about this yesterday, like around ads, and if you don't have an audience, maybe you need to spend money on ads in order to get the campaign in front of people. I don't know if you did that with Atom Limbs, but take us back to the kind of planning phase of the Atom Limbs campaign, talking with Tyler, like what was the strategy to help him raise 5.6 million?
Absolutely, and that's the beautiful thing about working with exceptional founders, right? Is that if they're committed to a goal, they will go after it at all costs. And those are the types of founders I like to work with.
And be relentless and try like creative idea after creative idea. And,
yeah, exactly. And so Tyler Hayes is by far one of the more talented CEOs I've worked with. He's absolutely incredible. I mean, he's worked for a YC-backed company before. He's helped scale a company to 1 billion users. He's had, his previous company exited to Amazon. So we're talking about a legitimate founder with an incredible track record. The thing is about community rounds is that you don't necessarily have to have a customer list of 50,000 people to be successful and raise from thousands of people. Fundraising is ultimately a sales process. And so you can build your funnel. And when we engage with a client that we believe in, we figure out what is the funnel? What does our pipeline look like? And do you have an existing pipeline or do we have to build it? Right? And so in the case of Tyler, he had done a previous Reg CF raise, so he had, a bit of a pipeline in terms of going back to his existing investors. And then we invested in other channels as well. And ultimately, we're able to build a compelling enough story, right, about ending physical disability with mind-controlled bionic limbs and attracting over 4,000 investors from 80 countries across the globe to invest in the mission.
What were some of those, maybe this is giving away your secret sauce, but what were some of those tactics that you guys used to get the word out? Yeah, he did have an audience, I guess. Like maybe that was one tactic, is get those previous investors to double down, to be the marketing team for the next raise. But what were some of the other kind of tactics that you guys were looking at?
Yeah, so I'll talk about the channels aside from paid ads because there was a bit of a paid ad strategy there.
Right.
But ultimately, I think we invested a lot in public relations. We invested a lot in webinars so that he was engaging directly with interested investors.
How did you organize those webinars? Was that something that he just spun up a webinar link, or was it through like a third party that helped you with distribution?
Oh, no. It's easy peasy, right? Like you just set up a Zoom webinar, you ask people to register. The wonderful thing about the Wefunder platform as well is that once you have a campaign that launches, people can follow along the campaign. And so for Adam Limbs, we had thousands of people that were following along that weren't yet investors. And so if you do look at fundraising as a sales pipeline, right?
Yeah.
You have somebody at the top of the funnel and it's your job to convert them. So activities like webinars, inviting people in, giving them a chance to engage with you, right? That's so critical. And, for venture capitalists, they get to grill a founder for hours. Yeah. They get to, get access to detailed data rooms,
Due diligence,
But for retail investors, it's really important to give them access. Right, to the founders. And so we organized a number of webinars, and they were all self-hosted and self-produced. Yeah.
Super tactical question, but as you say on Wefunder, there's the button where you can follow a campaign.
Yes.
Which maybe we need to change the wording on. As we were talking about it yesterday, and currently it says watch for updates, and me and Maria both think we should change it to follow, so maybe we can get that done on the product side. But how and when is the CTA invest in us versus follow us? Are you ever doing kind of top of the funnel marketing where the CTA is follow, or is it always just jumping straight to invest?
It's a good point. So I would say that what's really important if you're looking at it as fundraising as from a fundraising as sales mindset is that you do have to market, right? And you can't always have a very hard-hitting call to action, right? So some of the calls to action that we include are, attend this webinar, or hop on a call with our founder, if you're considering an investment of 25K or more. So we definitely look at different calls to action. We've never had a call to action to be follow, but I think that might be something we consider, especially for more like direct-to-consumer startups, right? Who may have fanatical customers, but maybe new to startup investing, right? And kind of need to follow along to build trust along the raise and see the momentum of the raise. And of course, that's something that we build into our strategy is demonstrating ongoing momentum so that if you are following along, you build confidence. And, for instance, like one of our clients that's live on the platform right now, Sensate, it's led by a brilliant CEO named Anna Gudmundsson. They've raised 1.6 million, and they are a consumer product company. And when they launched the raise, right, they had one revenue run rate, and it's since doubled, right? And so if you think about it, when they
We'll claim it. Let's both claim it, okay? 100% attribution for the Wefunder community rounds.
Exactly. But so if you think about it, one, Wefunder is incredible. But two, since setting their valuation, they've doubled their revenue run rate, like essentially de-risking the investment even further, right? And so for somebody who's following along in the beginning of the campaign, when they're ready to close, that's a really that's compelling momentum, right? So I'm an investor. I think everyone should invest in Sensei too.
Not investment advice, probably. So what about, just going back to something you said earlier, the kind of the sales piece, like, do you actually use like a CRM? Do you use like a tool? What does that look like? And how many kind of people go into that for a campaign like Adam Limbs or Sensei or Up Council?
Yeah, it's interesting. So I've had experience also running a business development representative team for an AI tech company. And so outbound cold sales is something I actually enjoy, oddly enough.
Weird. You're a weird person.
I will fully own that. I like connecting with people. I like making asks. I like bringing people along for a ride, right? And a good ride, a good journey with a brilliant exit, of course. But I think I learned that like when you're launching a community round, it's important to find people who share your crazy, as Tyler Hayes has said.
Love that.
Right?
By the way, just on that, as an aside on that, so Wefunder, shameless plug for the Wefunder podcast, Adventure Capital. I named that. I think it's a great name. But we interviewed Tyler from Atom Limbs, and he said this one thing that really struck with me. Maria just alluded to it, but he basically said that when you're raising capital, you're trying to get people to part with their hard-earned cash. It's really like hard. You got to get them super excited about what you're doing. And he said the best way to do that is to find people who share your crazy. And so for him, like people that are just super passionate about improving the lives of people who've lost limbs.
Yeah.
But yeah, really, just that was something that really kind of stayed with me.
Yeah, exactly. And I think it's our job, right, as CEOs or capital department working with CEOs to figure out who is our audience. It's not just retail investors broadly, right? It's much more nuanced than that. And so, given my background in managing a cold outbound team, like literally cold emailing and cold prospecting people, we do that with all of our campaigns too. And it's really powerful to reach out to angel investors that are accredited and can invest the 10, 25, 50K, 100K checks via email or via LinkedIn as well. And so that's definitely part of our strategy.
How do you think about, I was talking to Matt from Virtual, crowdfunding platform in Australia last night, and he was talking about the importance of the launch event in kind of the timeline of like a community round. And it made me think, like, I wonder if we should be more focused on that, put more energy around that Wefunder. How do you think about the timeline of a campaign? Like, how important is the launch, the private phase, like the kind of what's it called, the valley of death, like in the middle of the campaign, and then closing? Like, how are you thinking about kind of, that timeline and the kind of energy and the different like activities that go into each stage of the campaign?
Yeah, absolutely. So I think preparation, whether it's a community round or a venture round, is absolutely critical, right? I think founders often think, oh, I'm having an investor meeting, so that means I'm fundraising. But until you have your deck, your story, your financial narrative, your data room, everything just ready to go, you're not ready to raise. So preparation is absolutely critical, and the story matters just so much.
And what does that preparation look like?
So that's in the case of a Wefunder community round, that's getting a video done, the page done,
How important do you think the video is?
Personally?
Yeah, yeah. Super important?
Yes and no.
Probably depends on the campaign.
I think it depends on the campaign, yeah. I think the page for me is much more important. And, if people are scrolling on the page, it's essentially like a consumer website where they're making a decision very quickly to invest and check out. And you have to treat the page like that. Whereas the video, you can kind of give people that access, right, to the founder and how they speak, and you get a sense for the team, right? And I think that is critical.
What is your recommendation or advice on videos? Because There's kind of the two extremes of the spectrum. I feel are like a founder kind of talking into the camera.
Yeah.
Very kind of authentic, kind of raw, maybe real.
Yeah.
Versus like super produced kind of marketing video, like music playing, waterfalls. Where do you come out?
I definitely think that a well-produced video matters. In another life, I was actually a documentary producer.
Really?
Yep.
You've had like every career at this point.
So I think a well-produced video matters. I think a strong script matters, and quality matters, right? Like if you're raising a $5 million round and you come to me with an afterthought type of video, I'm not really going to buy what you're selling.
So high production quality, but is it like the founder talking, or is it like tons of B-roll and kind of both?
I think a compelling founder is essential. Yes, for sure.
And how do you, on the video, how do you strike the balance between mission and kind of story and narrative versus we're growing at 30% month over month, and our LTV to CAC ratio is 3 to 1?
These are very interesting questions, Jonny. I would say that
They're very interesting questions which are not on this list. So
I think it would depend on the segment of the audience that we're targeting, right? So when we work with companies, our team works with companies, we figure out who do we think is our target audience for this company, right? And depending on who that target audience is, we will tell a different story. So if it is a high growth tech startup, like LTV and CAC is absolutely essential. You can't be a high growth tech startup and not include those figures. Right?
If your community is other groups, then it's a video that works for that audience.
Exactly.
Good answer. So we were talking about preparation. So we got the video, the page. What else goes into this preparation stage?
So I think building out the pipeline, all the segments of the pipeline. So that could be friends and family, accredited angels, even micro venture funds.
This is going into your CRM.
Yeah, exactly. It could include your customers. It could include your users. It could include, journalists that you have in your network, right? Like you basically segment all your potential audiences and then develop unique communications and a unique communications flow for each of them. And then once they actually invest, you can develop a post-investment flow, right? So that you have a quick thank you. You're giving them updates on the business. And then, of course, you include the call to action to increase the investment over the course of the campaign. And so all of those...
Increase the investment and maybe share the campaign with their network.
Exactly, also.
Again, super tactical question, but how do you do that? How do you ask someone to share? Are you saying, please share and that's it? Are you saying, please share on this particular channel, LinkedIn, let's say, or Twitter? Are you saying, like, here's my LinkedIn post, please reshare this?
Yeah, it's absolutely essential that you remove friction and you do the labor for any time you're asking someone to do something for you, right? And this is like a pet peeve of mine. Like if you're asking me for a meeting, like provide your availability. Don't ask me what mine is.
Are you talking to me right there? When you Hopefully not.
So if you're asking your investors to share, it should be a 2-second, 2 seconds of labor for them where they're literally clicking a link and pressing send, post, right? And so in the most successful share campaigns we've had, we've said, okay, if you want to share on Twitter, here, retweet this. If you want to share on Facebook, do this. LinkedIn here. And like, it's just a menu of options and it takes all of 5 seconds.
Right.
Yeah.
So we're still in the preparation phase of the campaign here on this timeline, which is right, I think. We should be spending a lot of time in preparation because you are the queen of preparation. Maria told me backstage she has OCD, so I feel like you're the right person to be kind of obsessing about the perfect preparation of a Reg CF round. That's why yours go so well. Perks is another word that begins with P. How do you think about perks? Like, how important are they? What are the types of perks that like work best?
Yeah, I like to...
Again, probably, it depends. It's very complicated, and that's why all founders should work with capital department.
It absolutely depends, Jonny. And I think it depends on what you're trying to do with your community round, right? If you're trying to build a user base, right? Or upsell your current users, right? You can use perks as a really compelling way to do that. So if you are a consumer-facing company, providing your product is easy, right?
Yeah.
And so, yeah.
Do you remember what Tyler or KJ from Up Council, or what does Sensei have?
Yeah, so for instance, Up Council is a legal marketplace that delivers legal services at a third of top law firm rates, right? And so what they did is they actually have a really compelling business model where they're selling to both attorneys and the users. And so they had perks designed specifically for attorneys, and they had perks designed specifically for startups or users, and that went really well, yeah.
Yeah, I think perks is something I see a lot of founders get wrong, where it's like either one, here's a t-shirt, which is like doesn't, no one really cares, and also that's annoying for you to have to send 1,000 t-shirts in the mail.
Yeah.
And then two, it's like if you invest 50 grand, then you can like have dinner with me or something, which is just like, that's nice, but like, that seems like a lot of money to spend to have dinner with you.
Yeah.
And then the other one I've seen is like, where it's like, here's 20 different perks levels. If you invest $100, you get this, and 250, you get 500. I saw one yesterday that just had 3, and it was very clear, and it was, I thought like, that's a really good number. But one thing I think with perks is, you were kind of getting at this, is like, if you can give a discount on the product so that the perk is not just getting an investor to get up to the next level, but it's also driving revenue and profitable revenue for your company, then you're getting like 2 wins out of that perk.
Exactly, yeah. Fulfillment is a huge challenge if you have thousands of investors, and I think people get really excited to offer so much to their community, from a beautiful place of gratitude and excitement. But unfortunately, the fulfillment becomes a huge headache and a huge financial burden, and I don't think any investor really wants you to have to go through that.
Or maybe is motivated to invest because they get a t-shirt.
Yeah.
Okay, so anything else on the preparation side? Actually, two more things: lead investor and terms. So every company on Wefunder has a lead investor. They're going to vote for the individual investors in the SPV. So how do you help a founder think about choosing that lead investor, finding that lead investor, and then also with that lead investor and maybe through other mechanisms, figuring out the terms?
Yeah, so I think it, I don't want to say it depends, but it does. If one of the most exciting things, I think, is seeing, companies like Mercury, right, like raise on Wefunder, right? You have these high growth tech startups backed by venture funds like A16Z raising on Wefunder, and so then their lead investor can actually be an institution that's already an investor, right? And so you're really, going to market and saying, look, we're carving out a piece of our institutional round for retail investors on the same terms of the best venture funds in Silicon Valley, right? And that creates a really compelling narrative. So if you can bring on, a credible institution as a lead investor, I think it helps sell the deal.
Right.
If you can't, though, a lead investor that has some sort of credibility in this space, whether they're specific to your industry or investing generally, that always adds a lot of credibility as well.
So this is all on the preparation side, and then for the launch, what are is that like a huge kind of focus, and what are the different kind of things that go into the launch day?
Yeah, so the way that we look at it is that you have a private launch, you have a public launch, and then you have the closing period.
Do you actually want to, talk more about that? Because I see, again, a lot of campaigns that we go live in public and it's like we haven't raised any money yet. I think you guys are really good at this.
Yeah, all of our campaigns go live having raised a lot of money, and that's because the private phase is so critical. So in the private phase, we're basically de-risking all the issues of going public and having nothing happen. Right? And I think that it's so important in the preparation in the private phase to get to a viable goal for your ultimate round. or the ultimate goal of your round. So if you're doing a $5 million round, you have to raise at least $1 million in the private period, at least. In some cases, we've had companies, raise up to $2 million in the private period, so that when they do launch on the Wefunder platform, they launch with a bang, and people are like, oh my goodness, who are these people? They're such a success. And so we make sure, especially for companies that have a huge consumer audience, that they're set up for success, and as soon as they go public, they're already successful. Yeah.
So get a ton of money raised in private, then go public, and then obviously similar stuff around closing. I guess.
Closing is my favorite part. Absolutely.
Why?
Because the urgency, and then the stories you get to tell, right? Like, we're 90% subscribed and you have 1 week.
Right.
Are you in or are you out? Or, in a best case scenario, right? Like, we're oversubscribed, but we're still, allowing a few investments. We can't guarantee that we'll ever do another community round again, because we'll probably raise institutional capital.
Yeah.
So get in now.
Although, if they do raise institutional capital in the next round, why not carve a little slice out for the community next year? Just saying.
Well, exactly, and those things aren't necessarily mutually exclusive. But the point is that, like, you can't guarantee it, right? And so this is a unique opportunity, and it's like, make the decision now. And
it's
that
fair
urgency.
enough to say that as you're closing the current Wefunder round, but just like
keep it open.
When it comes, just allocate a slice for the people.
Yeah.
Cool. Well, that's the timeline.
Yes.
Maybe one last question. We're running out of time here, but you've already talked about a number of mistakes that you see founders make going live too soon, not kind of putting in the effort, and appreciating the time it takes. Like, are there other kind of common mistakes that you see founders make?
At the top of our discussion, I talked about how, for me, rejection was so hard, right? And asking for money was so difficult.
Right.
And since I love it, obviously. But I find that when you're raising a community round, you're going to get rejected every single day. And if we've built the engine correctly, you're going to be getting rejected multiple times a day, right? And so for the founders that have trouble with rejection and take it personally, as opposed to integrating it as part of the process, they sort of retreat, their morale goes down, their team feels it, we feel it.
Right.
It's tough, you know? And so I think the biggest mistake a founder can make is personalizing rejection such that we're slowing down our momentum, And rejection is absolutely okay. And this is why I love closing period too, because somebody that rejects you in the private or the public phase can see how much progress you've made, can see that you've doubled your revenue run rate or something like that, right? And then invest at the end. And so it's really important, I think, that founders just maintain that resilience and work on it. And I know it takes work, but they have to invest in it.
Love it. I guess coming into land, one last thing: if folks either in the audience here or watching online who are inspired and impressed by your command of this regulation crowdfunding space, and they desperately want to get in touch with you and you work with Capital Department for the next round, where do they go?
Yeah, so you guys can go to our website. It's Capital DEPT, so it's short for department, capitaldept.com, and reach out directly. I'd love to speak with all of you. Maybe.
She'll speak with all of you, but only a certain elite few are going to get to work with you. But this has been a really fun conversation. Thanks for doing it.
Thank you, Jonny. Yeah, we're such huge fans of Wefunder, and just love working with your team, honestly. We haven't yet worked with any other platforms because there's been no need. We're just so thrilled.
No offense to the other platforms in the audience, but please don't start now.
Those platforms, I'm sure, are wonderful, but so far, Wefunder is our favorite.
Thanks so much, guys. Enjoy the rest of the day.
Thank you.
Good job, dude.